Hello, everyone. My name is Lachlann. I write for Money Morning, and I'm also an analyst on Exponential Stock Investor. Well, today I think I've got a good update for you. I'll be talking a bit about central bank monetary policy and how that plays into Bitcoin and gold's future. So I'll be looking at some charts, some headlines, and then I'm going to introduce you to an expert on monetary policy who's got a new book coming out very soon. His name's Jim Rickards, in case you haven't heard of him. And yeah, I guess the big news was that Tesla has purchased 1.5 billion US in Bitcoin. And then that was followed up by some more news here, which is that the Bank of New York Mellon and MasterCard have also started moving into the crypto world. So this is pretty big news. And you can see it playing out in the BTC USD chart. And this chart comes via TradingView. So it's just, there was a bit of resistance that it ran into at about the 20 grand mark. And it's just absolutely smashed past that. It's trading at about 47 grand at the moment. Now, what does this all mean? Well, I mean, the best time to buy crypto is always yesterday, right? So I've been saying that for a while. And I guess a lot of people used to downplay the significance of monetary policy and the appeal of Bitcoin. A lot of central bankers sort of rubbished it. But let's just have a look at what central banks are doing around the world here. So here you've got by globalrates.com, you've got a selection of the biggest banks in the world and their current interest rates. The Fed's got 0.25, Australia's got 0.1, and then you can see that the European Central Bank, the ECB, has 0. Then after that, you can also see that Japan is actually in negative territory, and the Swiss are also in negative territory. So all of this, I believe, is playing into the Bitcoin price and the Bitcoin chart. But let's just take a look at, so yesterday we had a great article from my mentor and colleague Ryan Dintz on Money Morning. Now he's profiling a couple charts here, which I think are very interesting, and I've actually got those available for you now. So this is the sorry, not that chart, you want this one. So this is from Fred, which is economic data out of the St. Louis Federal Reserve. So this is an interesting one. You've got real potential gross domestic product, and it's got a bit of a dead cat bounce here if you look at its rate of change. But simultaneously, you've got M1, which is a certain monetary aggregate. So this might sound a bit complex, but I'll try and break it down for you. Basically, the amount of money in the system has gone through the roof, and it's not doing much to change the real potential gross domestic product. Now, you may be wondering what real potential gross domestic product is. Well, there's an explanation on the Federal Reserve website. It says real potential GDP is the Congressional Budget Office's estimate of the output the economy would produce with a high rate of use of its capital and labor resources. The data is adjusted to remove the effects of inflation. So, you know, it can get all very complicated very quickly, but the point is, there's a heap of money in the system, and it's not doing much to jolt the GDP back to life. And even this sort of uptrend in the money stock didn't produce much of a bounce in GDP, but it's gone absolutely nuts recently, which is the important thing to remember. Now, what does this all mean? Well, M1 is a certain measure of the currency in circulation, and that doesn't include just cash. It's also includes a number of things which you can see here. So it includes currency outside of the US Treasury, Federal Reserve banks, and the vaults of depository institutions. travelers checks of non-bank issuers, demand deposits, and other checkable deposits. So that's sort of money that can be readily employed into the system, and it's having a limited effect. But the other thing to be aware of is the velocity of M2. So M2 is wider than M1. It encapsulates a wider array of money. And you can find out what M2 is on Investopedia, which is a solid resource for sort of grasping very, very basic concepts and even some more advanced concepts. So M1 is a narrow measure of the money supply, but M2 includes all near money, which refers to savings, deposits, money markets, securities, mutual funds, and other time deposits. So if you look at M2 here, the velocity of M2 has fallen off a cliff, and it's got this sort of dead cat bounce right here, while the circulation of M2 is in an uptrend there, and it's sort of increased sharply since about this time last year. So that's another thing to consider, is that the money's not moving around very much, and what we've noticed in Australia is that the savings ratio has actually spiked. So I've previously talked about a retail bounce. So I think, and in Australia in particular, there could be some room for retail stocks to run, but this particular episode is all about Bitcoin and gold. So I've shown you the Bitcoin chart here, but let's have a look at the gold US dollar chart. So it seems to be holding up reasonably well, but if you look at the gold Aussie dollar chart, it's doing far worse. And this all comes back to the, I guess, trends in the AUD USD pair. So what you can see here is that I guess there could be some resistance that the current sort of bull run for the Aussie dollar is experiencing come into play somewhere around 80 cents. But for now, it's hovering at about 77.8 cents. So it's been a significant run for the Aussie dollar, and that explains why the USD chart for gold doesn't look nearly as bad as the AUD chart for gold. That's because of various currency fluctuations. But I guess the main takeaway point here is that gold has long been viewed as this hedge against inflation, and it'll be interesting to see if that holds up. We have yet to experience runaway inflation. So in that sense, for the gold buds out there, I'm still quite bullish on gold's long-term prospects. But if you're more short-term focused, I think the institutional acceptance of Bitcoin could be viewed as more attractive in the short term, even if it's starting to pull back a bit in a very short time frame. I'm a crypto bull and a Bitcoin bull at the same time. It just really depends on your time frame. So I think the current trend in the Aussie dollar chart against gold will probably continue for this foreseeable future, which could mean it's a buying opportunity. But again, you really have to consider timeframes with all investments. And even though gold is viewed as safer than Bitcoin, we'll see if that plays out as a valid criticism of Bitcoin versus gold, which is why just at the end here, I want to draw your attention to a great report that we've got available for you. It's Bitcoin versus gold. If you're interested in Bitcoin, if you're interested in gold, if you're interested in both of these things put together side by side, Bitcoin's long been sort of billed as the digital gold, as a sort of digital way of hedging against inflation. And this report explains all you need to know about this particular, I guess, pair of alternative currencies to fiat. So I would highly encourage you to check out that report. You can download it in the video description below. Now, please comment if you think I'm completely way off base here, or if you like this content. You know, it's always nice to get a little note saying the video is good. I apologize that it looks like I'm in a dark room. It's actually very bright outside and the lighting's a bit tricky to figure out. But anyway, apologize for that. You can find Ryan Dintz's article in the video description as well. I think it's a great article. And you can also say hello to Jim Rickards. This is the man. That's a close-up, but say hello to Jim. You'll hear more about Jim if you subscribe to Money Morning. The man's got a new book out, and I'd highly encourage you look into this new book. I believe it's called the New Depression. And it's sort of, he's a gold bug, but he's been around the traps far longer than I have. So I'd highly encourage you to check out this book. I'm sure it's a great read, as all of his books are. So I hope you've enjoyed this little dive into central bank monetary policy, its effects on the gold and Bitcoin charts, and I hope you have a safe week. If you're in lockdown in Victoria, condolences. It's not the best, but we'll get over it. And yeah, have a good one, guys. Take care. Bye.